Hello, I'm Brian Roten, Senior Reporter for CoStar News Hotels. I'm joined today by Lily Hugh. She is the Executive Vice President of Business Strategy at Crescent Hotels and Resorts. Lily, thank you so much for joining us.
Thank you for having me, Brian.
So, big year for Crescent. Let's start off with that. 25 years, correct?
25 years, and I will have been here for almost 15 of those. So it's really exciting to see, our quarter century anniversary. And so we have big things planned for our portfolio, for our associates. And it's great to see how we've evolved as a company, as a portfolio, to where we are today.
Can you tell us a little bit about the changes and evolution you've seen in Crescent over the 15 years you've been a part of that 25?
Yeah, so when I first joined, we were maybe around 60 hotels, a lot more select service. It was a time where receiverships and special servicing deals were more prevalent.
That's right, yeah,
Yeah, and
that
so
time of year.
exactly, and so we were heavily in those deals, and where we've moved today, bigger boxes, full service, upper upscale, lifestyle, and also into luxury as well. So, we're 120 hotels, which has been our size probably for the last 6, 7 years. We're not looking to be hundreds and thousands of hotels large. This is really our sweet spot. We've found that it works for us large enough that we have bench strength from a talent perspective. We have purchasing power, but still small enough that we can really focus on each of our owners, our associates, and our clients.
So, keeping in mind the sweet spot that you're aiming for, uh, what can you tell us then about any recent openings or new additions to the portfolio and just prospects for possibly new contracts as they come along?
Yeah, and in relation to that, Brian, we're very intentional about how we grow, right? And that's why we always hover in that about plus or minus 120. So the right clients, the right assets that we want to take over, we want to make sure we can impact the assets. And that's what builds long-term trust and relationships with clients, to ultimately result in more contracts and more hotels for us. At last year, Crescent opened 6 hotels across the country. We had an AC Element in North Terra, North Phoenix, and AC Element, which is actually the largest AC Element in the world right now, in Las Vegas Symphony Park. We opened an Autograph called the Remy in Scottsdale, and also our first JW Marriott outside of Virginia and Reston. So those all happened in Q3, Q4 of last year. Was very, very busy towards the end of the year. But we also have transitions as well, of course. So our the last couple that we had were the Westin Great Southern as well as the Renaissance, both in Columbus, Ohio. And so those were our recent ones. Looking forward, we have a few on the docket already, hopefully in the next 30, 60 days that we can speak to. And then, of course, openings wise, and we are opening a boutique hotel in New York City called the Elise. We'll
Oh
be
yeah.
opening as a luxury hotel in September. And then we are opening the Hotel Cali out here by SoFi Stadium, which is an Autograph. That's going to see a lot of press just given its location
I'm
and
sure,
the
yeah.
the hype there. So, we have a lot more openings, of course, after that, but those are immediate two that are up and coming, that we're really excited about.
Absolutely. Then, again, with all that in mind, what is your approach then to how you try to target, when you want to add, what is your approach to that? And then on the other side, obviously, what is your strategy then for holding on to the contracts that you do have?
Yeah, as I mentioned earlier, we're very intentional with how we target, and so one is we do want to make sure we can make an impact, right? And so whether that's based on market, it's a market we know well, or it's a market we have historical knowledge of, the right type of asset, right? Which for us typically is a full service upper upscale, lifestyle or luxury. And, we really take a hard look at that. I would also say, proud to say, over 80% of our business comes from referrals from existing clients. So whether it's more hotels with that client or they know another group that is looking for a different manager to try to make a larger impact. So actually, that's a large source for us, right, of new contracts. And all of that stems from us performing, right? To your question, Brian, how do we retain contracts? You have to perform. right? Ultimately, we have to manage that P&L for the client. That client is looking for that bottom line. What are they taking to the bank, right? Are they covering their debt service? And that is what's important for our clients. And so that's what we focus on. We're hyper focused on the performance, because you perform, that's how you stay employed, right? No different than us, right?
I mean,
We're
that
all
makes sense, yeah.
employees. Yeah. So,
So as you look at the third party management space, we've seen a lot of changes in recent years, namely a lot of mergers and acquisitions. There's uh, a couple of new entrants here and there, but we're seeing a lot of companies that are trying to grow that way, and then we're seeing brands pull back from managing properties, and we're seeing uh, in overseas markets a growing understanding and want for third party management.
mhm.
So, from Crescent's perspective, where you know where do you go from here? What are your thoughts on the third party space and how Crescent is fitting into this ever evolving segment of the industry?
Yeah, great question, Brian. I think to your point, there's been so much M&A activity, whether it's the larger guys coming in and maybe a smaller company hasn't been as successful. And so there's some M&A activity there or platform JVs. We as Crescent, we've really grown through the years and have been healthy enough that we don't need that. And that is continuing to be our intention is to stay a pure third party management company. We were founded and privately owned by our founder and CEO, Michael George. He is still our founder and CEO today, and so that will continue to be who we are as a company. We've been successful thus far with being a non-conflicted third-party manager, meaning we don't invest into our hotels, we don't offer sliver equity, JV, because it really allows us to focus equally across all of our assets, right? We don't have money at risk, and you're putting your A team there. So it allows us to really perform equitably for all of our clients. And when you think internationally, there are opportunities out there, right? And Crescent has been approached many, many times to cross the pond, South America, right? And we've stayed true to our knitting, which since our founding 25 years ago has been US and Canada. And so we stay within our two geographies. There are a lot of opportunities here, right? And so back to the point of being the size that we are, we don't want to dilute our focus. There are plenty of opportunities here, and we will stay here.
It makes a lot of sense. I mean, internationally, lots of opportunities, but that requires, I imagine, a great deal of expertise and knowledge of not just the country, but the market and the culture as well, to not just move into there, but to then succeed.
Sure. Yeah, absolutely. And with us, if we're going to do something, we want to do it right. And so have we thought about it? Sure. Right. To go overseas and it sounds exciting, but ultimately, the opportunities, there are plenty of opportunities here, right? That we've seen growth in the 25 years of Crescent. There hasn't been a single year that we have not seen growth. And when I say growth, not necessarily in the count of hotels, but growth in who we are as a company, going from select service to luxury, right, through our 25 years. So there are different ways to grow as a company, and it takes a lot of discipline. So, and we remain very disciplined in our approach.
Going back to an earlier point, we're talking about relationships with owners and with brands. Generally, we see everyone gets along, but obviously, when things come up, you have to work through any kind of problems or situations. So, uh, what is your approach then as you are trying to balance the relationship with the needs of an operating company, but also the needs of the owners that you're working with, and satisfying the standard requirements from the brands, and trying to make everybody happy, including the people who work for you?
It's a very, very delicate balance, Brian. And to your point, it's that three-legged stool of the owner, the operator, and the brand, when there is a brand present. And it's a bit of a dancing game, right? It's how do we give and take a little bit here and there. Ultimately, It is us as the operator's job to well represent whatever brand is on that building. Even if it's an independent, right? It is
Hmm.
still a brand. It is that independent brand. And how do we carry that through? And then ultimately thinking about the owner's bottom line, right? And so it's really navigating those different tranches and managing that P&L. No different than our owners. A brand also wants the hotel to be successful. Otherwise, the brand wouldn't be there anymore, right?
Right.
So I think ultimately everyone's goal is the bottom line, is that P&L. And so I think that the messaging, the communication, and how we manage that, it's a continuing education too within our own team, that we have an owner mindset. We are the operator, but we always operate with an owner mindset, as if this was our hotel, as if this was our investment, and treating every dollar that way, right? So that we're always looking at the bottom and how that impacts.
At Alice, it kind of is a way to take the temperature of how the industry is feeling at the start of the year. Uh, I get the impression people are still feeling there's reason to be optimistic about 26, but they are very aware of the challenges that are visibly there, and knowing that sometimes disruptions happen. So what is your outlook then as Crescent prepares to take on the remainder of 26?
I think as hospitality operators, being in this industry and being that service provider, um, I would say we have to be optimistic, and in a good way, right? I
Hmm.
think we always start the year, despite what headwinds or what headlines are out there, that we're optimistic, right? That things are only going to get better, and that no matter what, we will be able to execute on behalf of our owners. Even if the markets aren't going the right way, right? Are we gaining all the share that we can in that market, right? So there are different perspectives that we take a look through, a different lens. Our owners have large investments at stake, right? And they've entrusted us to manage that investment of theirs. And so we really approach the year with a lot of optimism. As a company, we are seeing growth, right? As a portfolio wide, we're seeing, group pace up 15% year over year, right? So positive checker to us,
And so
green
it's
shoots, we'll take them.
that's not nothing.
Yeah, exactly. So, we really take that approach, when whether it's at the end of the year going into budget season, as we start the year looking forward, fresh perspective. Let's leave 2025 and 25, and let's go get 26.
Sounds good to me. Well, Lily, thank you so much for taking the time to speak with us today, and thanks all of you for tuning in.
Hi, I'm Davon Reed.
I'm Omari Head.
And I'm Chris Henry.
We're the hosts of the Next Gen and Lodging podcast. It's a monthly show in which we interview a new generation of hoteliers to get their insights into a variety of disciplines and topics, from finance to food and beverage and hotel operations. Listen to us on Spotify, Google, Apple Podcasts, or wherever you get your podcasts.
This episode of the CoStar News Hotels podcast was recorded on January 27th, 2026 at the America's Lodging Investment Summit by Meredith Sheridan and edited for a podcast by Brian Roden. Head costar.com/hotel news for more coverage from that event and more. You can find all our podcasts on Apple, Spotify, YouTube, or your platform of choice. Thanks for listening.